What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. But the charting method and the trading method that we use can be implemented with any company that's publicly traded in the U.S. stock market. So make sure you hit that like button. If you haven't already, hit that subscribe and notification button as well. That way you're alerted to when we release new videos. We do release bonus content from time to time, so make sure you're alerted when we release those videos. Now, the nightly and weekend videos like tonight's video, we focus on identifying triggers and targets for trades ranging all the way from short-term intraday scalps, short-term trades, all the way up through leaps or long-term swings. So if you want a deeper dive into exactly how we set up the chart so that we can make those trades, make sure you check out the bonus content of our YouTube page. We've got a couple of videos that dive deeper into broadening formations, levels of support, resistance, things of that nature. So make sure you check those out. So I do encourage you to watch the full video. We do go through triggers and targets on all time frames, so we give some pretty good insight, not only on short term but long term times. Let's go ahead and look at the agenda for today, right? We'll go ahead and recap the price action from today, Tuesday, March 3rd, before we zoom out like we always do and take a look at the week, month, quarter, and year price action. Then we will zoom back in and set what we call the 4-hour markers and the triggers and targets for Wednesday, March 4th, along with, we'll do a quick review of the week, month, quarter, and year triggers and targets as well. Let's get into the charts here, starting with the 5-minute like we always do. This is how we can take advantage of the proven and repeatable strategy that we have, right? That strategy is looking for higher lows at or above opening print to get into calls, or look for lower highs at or below opening print to get into puts. When you get into those calls, the previous high a day and overnight high will be your targets. If you get into puts, previous low a day and overnight low will be your targets, right? So here we can see we opened price at 55.12, just below this slight gap that we had from a while back. Let's see, this is from February 5th through 7th, right? So we opened, got an initial push down, bounced almost directly off of market maker's expected move low, which also coincides with the overnight low, so pretty good support. We pushed up, we filled the gap, and then we got a gap fill reversal, right? So filled the gap and then went 2 down for the reversal. This 2 down locked this in as a lower high. If we pull in Friday's price action, here's the, or not Friday, Monday's price action. Here's the high from the end of the day Monday, and here is that lower high here at the beginning of the day on Tuesday, right? So we went ahead and entered puts here. Again, this is lower high at or below opening print. And we got a second 2 down candle, but it was a failed 2 down, right? So not the biggest deal in the world. We've got stops. This today we're a little bit different the way we set ours up because of how big that second 5-minute candle was. We went ahead and made our stop opening print, or basically just above opening print, in case we got a little wick through it. But we got the lower high after that, so everything was looking good. But we pushed down and ended up only making a higher low here, right? So once we made that higher low and pushed up and went above the high of the 2 down, we went ahead and stopped out. So did lose a little bit of money, but it wasn't a lot of distance, right? We entered here about 53.50, and we exited here around 54.20, right? So 70 cents, not the biggest deal in the world. But what we did do is start to look at those higher time frames, right? We've got 5, 10, 15, 20, 25, 30, we're 30, 35 minutes into the chart. So we want to make sure that we're looking at those other time frames. And if we just take a peek at the 15-minute time frame, right? Let's just look at today. There we go. Around that 9 o'clock time is where we set this lower high. So we did go ahead and take another set of puts here, a little bit heavier than we did at the beginning of the day, because always at the beginning of the day you don't have quite as much data to go off of from higher time frame perspective, unless you're just going off a straight location and not the strategy that we use as far as looking at price in comparison to opening print. So we did go a little bit heavier here and got a little bit more than we were actually looking for. knowing that we had already gapped down, and yesterday we had a red day as well. So how far we were going to go today, we didn't want to get too far ahead of ourselves, too far over our skis, however you want to frame it. But yeah, we went ahead and entered a little bit heavier here, and we got that pushed down. Now it pushed down directly to where this hourly broadening formation, and let me just activate this so you can see it a little easier, and where this 138.2 fib extension is, and that is for the bull flag from the April 7th low, right? So that 138.2 fib extension is some pretty good support. If you look to the left, we'll look at that here in a second when we go to the higher time frames. So we did unload a majority of the position here, and due to the fact that this was such a big drop in that 15-minute time frame, it didn't give us very good location for higher lows on the 5-minute. So let's scrunch this back down. Come on, Thinkorswim. Get back to today. Yeah, here we go, today. So what that did do is cause us to, right? So we had this big drop here directly to a specific level, right? That 138.2 fib in combination with that hourly broadening formation. So we did get rid of most of the position here. We pushed up, got the lower high. It's kind of played around here for about an hour, and then got that 2 down to lock this in as a lower high. However, that was immediately reversed to make this a higher low. We went ahead and exited our the rest of our put position here and entered a very light position, a call position back to the upside. Again, this is not based off of the proven and repeatable strategy that we use. This was based purely off of location, broadening formation. That 138.2 fib extension, like I said, is some pretty heavy support, and then to combine it with the broadening formation, we figured why not, right? Decent profit to the downside, made up for the small loss that we took at the beginning of the day, and some, right? So we were back in the green already at this point. So take our chance here. We already got rid of a lot of those March 20th calls that we have been swinging for a few weeks. With the Monday's price action, right? Once we went 2 down on the week, that's where we went ahead and exited a lot of, actually all of ours. I don't think we have any March 20 calls left. But to kind of get our foot back in the door to the upside, should this be some type of bottom, whether it be short-term, mid-term, long-term bottom, just based strictly off of location. That's where we went ahead and got some calls. Now we got more than we expected. We shot up, got back above market makers expected move low and above overnight low, right? So once we did that, now we know we're playing with some resistance levels, right? The 150 fib extension of that bull flag that we were talking about from the April low, the 23.6 fib fib retracement of from the January high, as well as the opening print, right? So we got the higher low, higher high, higher low, but then we got this lower low, and as soon as we got the lower high, as soon as we got this lower low, we went ahead and exited our call position, right? We just the full thing. We didn't leave any runners. We just wanted to at this point see how this level was going to be reacted to, right? Like we talked about, all these intraday points of inflection all in one place usually tend to last a little longer than some short time frame, right? So we were looking at end of the day possibly sideways or pushing back down. So exited that call position. Now it did pop back up, but what it did give us is a broadening formation, right? If we take that high to that high and that low to that lower low, come on, Thinkorswim, there we go. It gives us this broadening formation, right? And you can see the end of the day we didn't do anything with it, but what that means is, there's no trend here. It's not down or up. We've just got a broadening formation. So no point in making a move at that juncture, and basically watch price go sideways. What we did do, however, though, now we know how much we talk about the 1 hour time frame. It is kind of king from the intraday standpoint, and you can see here after we played around towards opening print. Oops, let me get the old chart up there. There we go. After we were playing around with opening print, we did go two down, or this was a three in comparison to this candle, but this two up, this candle, we went below this two up, so that locked this two up in as a lower high. And once we that got locked in as a lower high, we went ahead and entered a couple more puts for the March 20th expiration. We want to swing those overnight. We'll see how they do. A lot of geopolitical stuff going on, economic data that should be released as well. So the confidence in that overnight swing isn't the highest, but we're just going with the chart, with what the charts give us, right? So we'll see how things end up tomorrow, but that's how things look from more of a zoomed in intraday view. If we look at things from a 4-hour perspective, remember yesterday at the end of the day, we did close with this 1-2 down, just triggered the 2 up barely at the end of the day. So we were looking for follow through to bring us up through the high of this 2 down, which would then have triggered this 1 combo 2 down, 2 up, combo 2 up, which should have brought us back up to that $70 area. Instead, we just totally failed. And you can see this was the let me just bring this up so we can be more visual. About here from 70s to 58, 59 area. That's the range that we've been trading in, right? This was a look above and fail. This was a big look below and fail, back up into the range. Slight look above and fail. Look above and fail, back to the bottom of the range. We thought we were going to get the bounce off the bottom of the range, but we failed again. So is this going to be another situation where we get this look below and fail back up into the range? Or are we going to get some type of push up tomorrow just for some type of lower high to continue the movement back down to the downside, right? We've got some gaps below. The month and quarter flip are here as well. Going 2 down on the month is right here, which gets very close to triggering that 1-2 up 2 down, or I'm sorry, 1 combo 2 up 2 down on the month as well. We'll get to that here in a second. So we're looking at some pretty good potential downside if we do continue down. Again, even if we get that little pop up tomorrow, speaking of the 4-hour time frame, right? We closed with the 1 in the second 4-hour candle today. So even if we go 2 up in the first 4-hour candle tomorrow, we still got to be on our toes for a 1-2 up, then 2 down reversal back down to the downside, right? So that is a possibility for tomorrow. But just looking at the chart, right? We're back below that range, and it remains to be seen. Are we going to get that look below and fail? All right. The day chart looking pretty similar, right? We were trading in that range before. Let's get the better chart out here. There we go. We were trading in this range here before, like we've talked about. Now we've got that look below. We're hitting that support level, basically the breakout level from the beginning of the year, which was the major resistance level at the end of 2025, right? Remember all that resistance. We can go to the left even more. No, this is the daily. Yeah, so we've got all this resistance at the end of the year at that $50 level. So we're hitting that. We've got essentially a double top. We're at the neckline. So if we break the neckline and make some type of lower high below the neckline, now we're looking at a pretty big move to the downside. If we just take out, let's take out our measuring stick here and go here to here, that's about 40%, about $21, right? So whenever you break the neckline and confirm a double top, you generally go the distance from of the top to the bottom to the valley and the double top. So what, 20 something dollars, 50, that brings us back down to 30 bucks, right? And look where that is. Got that gap right there. This is what we were talking about previously. That's where this 1-2 up 2 down combo 2 up 2 down on the month will bring us to as well. So just keep in mind, the door has been opened. We are right there. It just remains to be seen. Do we step through it and continue going through it, or do we turn around and shut the door, turn around and walk away, right? Get back to the upside. So we've been mentioning patience is going to be the key, and that remains to be seen, right? If we go to this week chart, my thinker's running so slow for me. There we go. All right, so yeah, if we're looking at this, remember we made this 1-2 up 2 down on the week. Make this bigger for folks here. Get a better chart. Yeah, let's go with this. So yeah, we had the 1, 2 up, 2 down that triggered, ran to completion. Here was the magnitude. This is the low of the candle to the left of the 1, but what that did kick off was this combo 2 up, 2 down, which the magnitude of that move is down here at the 49.33 level. So still a little bit of room to go to complete that strat. Should we should it be completed, and at the very right below that, we've got another, the gap here at 48, and then the gap here at 45. So could give us that momentum, be kind of act as a magnet, both of those, to pull us even for past that 49.33 level. The reason why we bring up that 49.33 is because if we go out to the month here, clean up the chart a little bit more, we can see that we've got on the month chart a 1 combo 2 up that has already completed. Now we're looking at what is this candle going to do? Are we going to get another 2 up, or are we going to get the 2 down? If we get the 2 down, that gives us this 2 up, 2 down. That will bring us to the top of the gap at 45.13. And if we dip into that gap, that then triggers this 1 combo 2 up, 2 down, which will take us not to the low of the 1, but to the low of the candle to the left of the 1, down here at 28, which again gives us another gap. And not too far below that at the $22, $23 area is another gap. So, if things really start to get hectic, geopolitically, and we're not getting those catalysts to the upside for chips that we're looking for, it's very realistic that we see the $23 level, right? So just want to keep that in mind. I'm not saying that's what's going to happen. We don't get into predictions on this channel. We just set our triggers and targets and play with whatever price action gives us. Going to the quarter, we had this 1 combo 2 down, combo 2 up that triggered, and it ran its strat. It reached 70.08. So after it reached magnitude, nothing else on the quarter to do, right? We just got to wait for those lower time frames. And you can see how, we made the higher high, but that's coming from a lower low on the quarter, and it's looking like it could just be a broadening formation. And if it is, are we just coming back down to the broadening formation to close these gaps before we get another push to the upside? Possibly, but again, we're not getting into predictions. We'll talk about that a little bit more if the right things start to trigger. But from the quarter standpoint, there's really not anything that we have to do. The same thing applies to the year, right? When we went 2 down in 2025, we triggered 2 up at the beginning of 2026 for the 2 down, 2 up. It already went up to that 70.08 magnitude. So again, we've got to wait for those lower time frames for these higher time frames to have anything else to quote unquote trigger. So again, high time frames, we've definitely gotten more neutral, but it's not time to get totally bearish yet, right? The structure is still there. We're still in force with the 1 combo 2 down, combo 2 up on the quarter, and still in force with the 2 down, 2 up on the year. So those are definitely positive, but we are getting that neutralization and a little bit of a breakdown, especially on that week chart, right? We got to continue to stay above that 49.33 level. Otherwise, those floodgates can start to open, right? So that's what we've got from a zoomed in review of today's price action, and then a zoomed out view to just level set and make sure we know where we're at. Let's go ahead and dive back in on the shorter time frames. Let's go to the charts and set things up for tomorrow, and how we will use that proven and repeatable strategy in the morning to try and profit from, right? So let's make sure we get all of the important levels here, the 4-hour markers, right? So that's previous high day, overnight low, and previous low a day. Overnight high and overnight low will probably move before we open. So let's just say overnight high gets us up to market makers expected to move low, and let's say overnight low dips us down here back to this 138.2 fib extension of the April 7th bull flag. So say we get a wide overnight price action, or range, price action. And then let's say we just, open in the middle of it. Right. So let's say price level 1 is tomorrow's opening print, right? If we open and we push up maybe get a rejection off an overnight high and pull back, but then we get some type of higher low at or above that opening print level, then we want to look to get into calls targeting overnight high and previous high a day. All right. If we open and we push down, maybe bounce off an overnight low and then push back up, but get some type of lower high at or below opening print, we want to look to get into puts targeting overnight low and then previous low a day. All right. That's just the simple, proven and repeatable strategy for early morning scalps, which could then turn into longer day trades, right? So you would have gotten a very early entry on a day trade, right? So if we reach previous low a day with momentum and we're getting lower highs, then obviously we look at the 4 hour, our notes for the 4 hour triggers and targets and the 1 day triggers and targets, right? And we continue down that path. But for the proven and repeatable strategy for those early morning scalps, and which can turn into early entries for day trades, we want to look for higher lows at or above opening print to get into calls, or lower highs at or below opening print to get into puts. All right. Now let's zoom out here to the 4 hour and take a look at things. What's going on? Thinkorswim. There we go. There we go. Let's take a look at things from more of a day trade perspective. So once again, we've dropped out of this zone. Are we going to get this look below and fail to push us back up into the zone, or are we going to get even a look below and fail just to fill this gap and then get a gap fill reversal to push us back down, solidifying some type of lower high outside of this range that we were trading in previously, right? That's the question, right? So because we closed with a 1 on the second 4 hour candle of today's price action, it does make that first 4 hour, really all of tomorrow, a little bit trickier, right? Because again, we talked about we could get the 2 up, right? So we could get a 2, 1, 2 up reversal, entering at the high of the 1, exiting at the high of the 2 down to the left of the 1, right? That's just the STRAT, right? Now, if it goes past the STRAT magnitude and looks up into the gap, then we can look for gap fill. But once we get that gap fill, do we hit the week and month flip, 58.15 gap fill reversal and start to pull back down? That is a very good possibility. If we do that, then we want to be on the lookout in the second 4 hour session of tomorrow, period of tomorrow's session, for the 2 down, right? The 1, 2 up, 2 down reversal. That would take us not to the low of the 1, but to the low of the candle to the left of 1, which is today's high, which tomorrow will be previous low day. All right, so just got to stay on our toes. We're outside of that edge of the range that we were in before, just like we were talking about. That's where we want to get the plays in. And it was a little unfortunate for anyone who was not already in inputs yesterday, that it triggered overnight, and there wasn't the best opportunity to get in for the push down, but it has pushed down. We're very close to the level of strong support, the breakout point for this year. So could we see that push back to the upside? It's going to be kind of tricky, right? Just stay on your toes. If you're not able to be in front of the charts all day, maybe you hold off on making any new purchases of any new contracts, right? What am I trying to do here? Oh yeah, there we go. If we switch to the day chart, right? Again, it's the same thing. So we could get the 2 up to trigger the 2 down, 2 up. Maybe we get the gap fill, but it would be very hard unless there's some crazy catalyst that we get tomorrow. It'd be very hard to complete the 2 down, 2 up strat, right? That would bring us all the way back up here to the $62.80, $63 level. And we've got a lot of resistance to get through, right? We've got the 161.8 fib extension of the April 7th low. We've got the month and week flip here at 58.15. We've got last week's low, which basically lines up with last month's 50% level. We've got this monthly broadening formation right here as well. So quite a lot of resistance to get back up to that level. But I'm not saying it can't happen, right? Because again, this could just be the look below and fail, just like we had a few weeks ago, right? Here's this big look below, and then you can see we shot right back up to that $70 level. So stay on your toes. Just be ready, right? Now that's because the same thing to the downside, right? We don't have a strat reversal. It would just be a continuation. So obvious entry is previous low a day, But you've got all these levels of support, right? Last quarter's high, last month's low, 2024's 50% level, which again was a big resistance level that we had, in between. Basically, the 46 to $50 level was resistance for quite a long time at the end of the year last year. So even if we do push a little bit to the downside, just beware. We do have some major levels of support, but we do have these gaps here at 48 and 45 that could also act as magnets. So just got to stay on your toes. I don't know that patience is really the word right now. But the word I would say right now is most important is discipline, right? If you are disciplined and wait for those actual triggers, then you should be all right. And don't worry about if something triggers overnight, trying to chase it. Sometimes the best trade is not to trade. You don't want to get caught chasing, right? So just be prepared. Let's go ahead and go to the charts to the notes at this point. We've looked at the charts quite a bit today. So again, for Wednesday, March 4th, there will be 210 trading days left in the year. The previous close, or the close on Tuesday, March 3rd, was 53.42. And we know that the week and the month have flipped red now, right? We've got to get back above the 58.15 level to flip those green. The quarter and the year are still green. We would take getting below 45.13 to flip those red. But what that means is we no longer have full time frame continuity, meaning we have a mismatch of time frames, right? Red, green, green. So we could expect a little bit more chop when that happens. We'll see. There's a lot more momentum for the bulls when all time frames are green, and there's more momentum for the bears when all time frames are red. So when there's a mismatch, it's just basically a fight, right? We know that the week's expected move for this week was $8.86 from the close on Friday, giving us an expected range of 71.63 to 53.91. Obviously, we are below that bottom end, which is fine. The market maker's expected move is right about 70% of the time. The other 30% of the time, price does go past those expectations, and this just happens to be one of those times. So not the end of the world. Like we've talked about before, these levels are not end all be all levels. It doesn't mean once it hits 53.91, price has to reverse and go back up, or has to go sideways even. It's just a level up of inflection, right? And that is obtained from looking at the options chains and where the interest is. So gaps above, right? We just created one today or overnight, Monday night. So we do have that above, and we did close one of the gaps below today, right? So that's no longer on there, but we do have these remaining gaps to the downside. We talked about on the 4-hour time frame, if we go to the downside, that triggers this 2-1-2 down at 53.12. 51.36 is the magnitude. If we do reach that and continue to go through, right, the next point of inflection is at 49.33 level we've talked about quite a bit, and then we have a gap close at 48.09. Now to the upside, if we go up in that first 4-hour two up in the first 4-hour candle of Wednesday's price action, then we trigger this 2-1-2 up at 55.48 with the magnitude of 55.86, which then triggers the 2 down 2 up at at 55.86, which gives us the extended targets of 56.92 and finally that gap close at 58.05. Right. On the day, if we go to the downside, again, it's a 2 down continuation, triggering at 51.36. And here are the targets that we have listed for you, including the gap close at 48.09. If we go 2 down, 2 up, that does trigger a reversal. So it triggers at 55.86, and the magnitude of that move would be 58.05. Should we reach 58.05 with some momentum and continue to get those higher lows and higher highs and continue to push up, we've got these extended targets listed out here for you as well. We talked about on the week, we triggered that one failed 2 up, 2 down, and the combo 2 up, 2 down. So we reached magnitude for the first STRAT reversal, and then we've started to hit these extended targets. The magnitude for that combo 2 up, combo 2 down is going to be 49.33. So that would be the next major STRAT target. But again, we've seen how that can very easily domino into these lower lows, which is why we went ahead and listed them out for you here. On the week, if we were to go green 3 or a bullish engulfing candle, we've got to get up to 72.36. We're quite a ways from that, so not really any point talking about it too much, other than if we do for whatever reason get up to the level, it may be prudent to start looking at that all-time high of 74.21, because whatever catalyst would have got us up to here, why would it stop there, right? On the month, we're still inside. 49.33 is that trigger to the downside, which would trigger the 2 up, 2 down. Not a lot of magnitude there to 45.08 from a monthly perspective, but that 45.08 then triggers this one combo 2 up, 2 down, and that magnitude is all the way down at that 28.12 level, right? If we can turn this around on the month and go 2 up on the month, there's a lot of month left to go. We're just 2 days into it, so it's very possible to happen. It could happen, but we've got to get up to that 72.36 level, and if we do, right, we've obviously got the all-time high of 74.21, but then these extended targets listed out here for you as well. And we talked about on the quarter, we already ran the 1 combo 2 down, combo 2 up, and the year we ran the 2 down, 2 up, so not much else to talk about there. But that's what we have for the triggers and targets for everything from a scalping perspective all the way up through the 1-year chart. Try to jam in as much information as possible without taking up too much of your time. So we do hope you enjoyed today's video. If you did, and if you've made it this far, it would mean a whole lot to us if you hit that thumbs up. It goes a long way to help the channel grow. And, again, we want to say thanks to those who continue to tune in and continue to give us those thumbs ups. We've made a pretty decent community around here, and we'd like to see it grow. We don't charge anything. There's no membership fees or anything like that. So if you could give us a free thumbs up, that would go a long way. If you want to share the channel or share today's video, that would also go a long way. So again, thanks to those who continue to tune in, and we'll go ahead and end the video here like we normally do. If you're watching this Tuesday night, we hope you get some good rest tonight. Wake up refreshed in the morning. If you're watching this Wednesday morning or Wednesday during the day, we hope you got some good rest last night and woke up refreshed this morning, and we look forward to getting out there and trading with you.